Good morning, everyone. I'm really happy to be here. Thank you all for coming. So I actually gave a talk at this event almost exactly a year ago, and also about looking at some global regulatory trends, specifically in the United States and Asia. I can tell you that the world has changed a lot in that 1 year. So I want to use this opportunity to talk a little bit about some of the updates that I've seen in the United States and also in Asia. All right, let's start with the United States, where I am technically based. I'm sure you've seen there's been a lot of talk about this whole idea that the United States is entering a new era for crypto. Obviously, much of this has to do with the new presidential administration. For many years, people in the crypto industry criticized the United States for being very unfriendly to crypto. And now there is a lot of excitement in the industry that the environment is finally changing. I think the key question to ask here, a very important question, is how much of this is signaling? You know, people saying, okay, this is a new era, and how much of it is actually real regulatory change? I think this is an open question that people don't really know. Anyway, this slide looks at a few more of the specific things that have been happening in the United States that I would say are pretty significant. The first one, obviously, is that SEC Chair Gary Gensler is out. There will be a new chair of the SEC. As many of you know, SEC Chair Gary Gensler was not particularly popular in the US crypto world. He was seen as being very strict on crypto and very enforcement oriented. SAB 121, that has to do with financial institutions, that was also a very unpopular thing. That's gone. Some new rules from the FDIC, crypto task force. I do want to note also, though, that despite all the excitement in the United States about this new era for crypto, there are also some controversies. One of the controversies is about the presidential meme coin. Some people in the crypto industry were not very happy about this, in part because they're afraid that retail investors will lose money, and this will not be good for crypto's reputation in the US. The other thing that is fairly controversial is the strategic crypto reserve. This is something that is apparently happening. This has been criticized for some people for various reasons. Some people just don't think it's a good idea. Other people don't like this idea that it's not limited to Bitcoin, because the president has suggested that this will be not limited to Bitcoin. It's not a Bitcoin strategic reserve. It's a crypto strategic reserve, which could include some altcoins. Some people don't really like that. So there are some things that are still being discussed, and even people in the crypto industry are not entirely happy with. This slide I also showed last time, and I'm just showing it for reference. This is, again, why the US gets a lot of criticism, is because of all the cases that the SEC has brought against the crypto industry. Now, the issue isn't so much about whether these cases are wrong or right. The issue is more about this idea that the US did not have clear rules in the beginning and instead went after companies later, which is known as regulation by enforcement. This is actually starting to change, though, which is interesting. Some of these enforcement actions are dropped. For example, Ripple, Coinbase, Consensus, Cumberland, Kraken, and more. But again, this is only part of the story. Just dropping cases does not necessarily mean overarching regulatory change. Okay, let's turn to Hong Kong, where we are. Now, Hong Kong, as I've said many times, deserves a lot of credit for having a very comprehensive regulatory framework, for putting in the time to kind of make crypto regulations. I think, one of the discussions in Hong Kong is, how do you balance this, extensive regulation without being too strict and making it too difficult for businesses? And I think that's something that Hong Kong is actively working on. Since I was here last year, there's been some changes in Hong Kong. I think last year there were only 2 licensed exchanges around this time. Now there's about 10. I've heard people in the industry talking about this SFC Aspire roadmap that I think people are pretty optimistic about, is looking as a way to kind of improve regulations for the industry. Hashkey, who is sponsoring this event, has a really interesting tokenized fund project. So, tokenization, I think, is something we're going to be seeing a lot of in this region. And also, I think it's very interesting that Hong Kong has a crypto tax exemption for family offices, private equity funds, and hedge funds. This is just one slide. There's a lot going on in Hong Kong. You don't need me to tell you about it, but these are some of the big changes that I've noticed. Another important thing about Hong Kong, stable coins. This is a really big deal. So still, even though stable coins are such a big market, very few jurisdictions actually have stablecoin regulations. So Hong Kong has a draft stablecoin bill that was submitted to the Legislative Council in December. They also have a sandbox. 3 projects were admitted to the sandbox. And we're going to see stablecoin regulation in Hong Kong very, very soon. We don't know the exact dates. We may see the bill approved sometime in May. The enactment date could be as early as this summer. And then we will see the first regulated stablecoins in Hong Kong, possibly by Q3 or Q4 of this year. Hong Kong stablecoin regulations seem very thoughtful. There's a few specific rules, again, strict, but for example, that stablecoin issuers need to retain full backing, and there are some rules about how the fiat reserve assets can be invested. This is all really important because I think the fear in all jurisdictions is that you don't want a stablecoin run on the bank, right? That's the fear. The fear is that, if for some reason people start to pull out their money, if a stablecoin issuer doesn't have that money, or if the money is invested in really risky products, that could be in a really, really destabilizing situation. So that's why Hong Kong and other jurisdictions have regulations like these. Japan, this is another country where I spend a lot of time. Japan's really interesting. Like Hong Kong, Japan is very welcoming to digital assets, but also very, very strict. Now, Japan is interesting because the Japanese government, the Japanese regulators have really been very welcoming to crypto. They talk a lot about crypto and Web3 and making Japan a capital of Web3. So why is there not even more activity in Japan? I think the answer is kind of simple. It has a lot to do with taxes. Japan has a real tax problem. So right now, the tax on crypto can go as high as 55%. 55%. That makes it really hard for Japan to compete with places like Hong Kong, Singapore, and Dubai. But now, what's interesting is that there's discussion of lowering that tax rate to around 20%, which I think would be that could change things, be a real game changer for Japan. And that could also set the stage for a potential crypto ETF in Japan, which a while ago seemed kind of impossible, now seems like that might be a possibility. So these conversations are actively happening, but I would watch the tax thing because that would be a big change for Japan. Japan also was Japan was one of the first countries in the world to actually have stablecoin regulations in place, but it's taken a while to get the first stablecoins, in part because the rules are really, really strict in Japan, really strict. But we've seen some important changes there. For example, Circle USDC has recently launched in Japan, so that's a big deal. So we're finally starting to see the results of the efforts of Japan's stablecoin regulations. A few other data points about Japan that I think are interesting is Japan exchange Coincheck in December went public on the NASDAQ stock market. That's very significant because there are very few publicly listed exchanges in the United States. There's basically just Coinbase, and now there's Coincheck Group. So that's a very good example of a Japanese crypto exchange going global. And then finally, Sony has developed a blockchain called Sonium, which I just think is a very interesting move by sort of a big Japanese corporation getting into the Web3 space. Okay, and then finally I want to talk about a larger trend, old money in the digital asset world. This is something that's been going on for a while, this idea of institutional investment. We're going to talk about this in our next panel, but the idea of old money is basically money that's not crypto money, banking money, family office money, whatever. We're seeing a lot of this in tokenization, RWA. A lot of these sort of banks are really excited about tokenization, really involved in tokenization. A few data points that I included on this slide, they're largely from the United States. Obviously, this is happening in Asia as well, but these are some of the more sort of well-known, well-documented ones where you have, banks like JP Morgan Chase, Goldman Sachs, putting a lot of money into the digital asset world. So this is obviously extremely significant. Of course, one of the big questions, especially when you look at things like RWA tokenization, is this really crypto, right? Like, they're all permission blockchains, it's a little different sometimes from our understanding of what crypto is. Okay, this is another really important trend, which I know many of you know about, Bitcoin holdings by public companies. So why is this important? This is important because this is a way for a lot of non-typical people to get involved in the crypto world. For example, pension funds or institutions or just kind of like ordinary people who, for whatever reason, are afraid to buy Bitcoin directly. They're going to invest in companies like MicroStrategy, which now calls itself Strategy. As you can see from that chart, MicroStrategy, or Strategy, I guess is its name now, is by far the leader in this. And this is attracting investment from a very different class of investors. So I think this is a really interesting development. What's also interesting is that there's a Japanese company on there, Metaplanet. So we're starting to see kind of a lot of action in this area. Now, I want to talk a little bit about this more. This is specifically about MicroStrategy, or again, Strategy, and looking at their top institutional holders. So as I just said, what's interesting about this is institutions that might not ordinarily be able to invest in crypto or Bitcoin directly are doing it through vehicles like MicroStrategy because they can invest in it like a stock, like it's on the stock market. Now, I think it's important, though, to talk about very quickly some of the benefits and risks of something like this. Now, obviously, MSTR is quite an interesting stock. Yes, I think it was Friday in the United States. The stock market has been very, very red, not doing very well. MSTR was up. It was sort of defying the trend of the stock market. So I could see how it could be a useful hedge for some people, the way that Bitcoin sometimes can as well. However, there are obviously certain risks. Now, MSTR is technically a software company. It's not, that's technically what it is, but in reality, it's kind of like a Bitcoin treasury company. But basically what that means is that it's basically very dependent on Bitcoin. And, of course, so some of the concerns people have about Strategy is, first of all, what happens if Bitcoin crashes, obviously. This is a company whose fate is very tied to the fate of Bitcoin. That's an obvious one. There are other ones as well. For example, why is there a premium? I think there's some level of mystery as to why there's a premium, a MicroStrategy premium. The other questions that I think are important to ask is is it healthy to have one company, if you go back to this previous slide, is it healthy to have one company own this much Bitcoin? This is supposed to be a kind of decentralized thing. And I think the other thing, to ask about these public companies is that, MicroStrategy is a fairly sophisticated company. They have a fairly sophisticated financial mechanism for hedging risk, but we're starting to see a lot of MSTR copycats, and not all of them are going to have the same kind of risk management. So that could actually pose a challenge to investors and present risks for investors. So anyway, I think these are, this is a really important trend to go on. I know it's happening in Asia too, these ideas of public companies holding Bitcoin. On the one hand, it does open up things, it does open up the market more to old money. On the other hand, it does present a little bit more risk. Anyway, those are some of the things that I just wanted to talk about today. I'm very happy to be back in Hong Kong, and thank you very much.